Jonathan, great to see you. Certainly, is this just a gut check that we're getting right now?
Look, it is just a massive move to the exit doors, I guess. A lot of people, it is a mad rush at the moment, and some of the moves I haven't seen pretty much ever in some of the commodities, particularly silver. But yeah, it's people nervous about the price of commodities. It's people re-evaluating where we think we are in terms of the US recovery and how much traction we're getting out of those growth economies actually slowing. And really, should commodity prices be at those levels?
I just want to also, focus in on silver for a second, because we had the way that it's traded. In fact, the margin trade on it being changed entirely, expanded, so they need to put aside more money now. That spooked people. Are people thinking the same thing could happen with some of these other commodities here?
Look, I think when the exchange starts to put the initial margins up, they tend to do it to protect the investor and also to protect the exchange and also the integrity of the market. But I think in this particular case with silver, we could really see that it was a bit of a bubble forming, and that once that bubble was pricked, then the market would come down very quickly. Now, combine that with the exchange increasing its margins, then you've got a very volatile situation, which we are currently seeing. Essentially, if margins continue to push up in other volatile commodities, there is that chance that you get the same rush to the doors, where people start to fear that they've got profits and they just want to put them to bed. So I think it's a caution that we have to be wary of, particularly when we're within these volatile times. And look, when you see a movement of close to 30% in 3 days down, you've really got to question the safeguard and the integrity of the market.
It also goes to how much speculation and how much froth was on the price of silver. Yeah. But trying to buy it now would also seem that you're trying to catch a falling knife.
That's one of the things. You're dead right, because what we have seen is the weight of money moving into a lot of these commodities have just created a market which is wrong, which is mispriced. We see that a lot of traders have been used to that short dollar long commodity trade, and it's been devoid of the fundamentals, in keeping prices where they are. So as a result of that, we've had this disconnect between true fundamentals and actual real prices for commodities. And I think this is just the commencement of a realignment of asset values in some of our commodities, so we get back to some very decent levels.
How long does it go on for, though? I mean, that's the thing, and before we resume the sort of trajectory we've gotten used to.
Yeah. That's correct. Well, think of it this way. With crude oil, for instance, we've seen this realignment, these very sudden moves. Does that mean there's a top? When we looked at the 150 we saw before, it went down to 36. When we looked at the 115, which we've seen recently, how far can it go lower? Now, just of interest, just imagine what would happen if all of a sudden Gaddafi was taken out of the equation. All of a sudden we've got 1.4 million barrels coming back onto the market. With that question and that question on the economic strength of the global economy, with an additional 1.4 million barrels, where could crude prices go? And you could realistically suggest that crude prices could come back from whence they went at the beginning of the year, and that could be back to US $80 a barrel. So the Gaddafi situation gets calmed, and all of a sudden crude prices get back to good levels, which represent very good fundamentals, and that could be US $80 a barrel.
Jonathan, great to talk to you. Jonathan Barratt there from Commodity Broking Services.